Welcome to Sunday mornings at the Marxist Library. Before we start, I'd like to remind you that we record our presentations and discussions that follow, and we'll post them on our YouTube channel at ICSS Marxist and on our website at icssmarx.org. The ICSS stands for the Institute for the Critical Study of Society, and it's the volunteer organization that organizes these Sunday morning sessions. Before the pandemic, we met physically at the Nebel Proctor Marxist Library located in Oakland, California, USA. Since the start of the pandemic, we've been conducting our sessions on Zoom, and we now have speakers and participants from around the world. So good morning, good afternoon, and good evening, wherever you are, and welcome. Note that we're going to start offering hybrid sessions, both physically at the NPML Library in Oakland and online soon. If you'd like to receive announcements about future presentations, you can sign up on our email list at icssmarx.org to receive email notifications about future meetings and announcements. My name is Alan Miller, and I will be hosting today's session. I'm a member of the program committee that organizes Sunday morning sessions, and I'd like to remind everybody that we always welcome your input, feedback, and suggestions for topics and speakers. You can contact us through our website at icssmarx.org. For over 15 years now, Sunday mornings at the Marxist Library programs have been a platform for diverse presentations on a variety of topics. This meeting is a comradely forum for political discourse and debate. We ask participants to respect others and keep the discussion focused on the topics at hand. The opinions that are expressed here today are those of the participants and do not necessarily represent those of the ICSS or of the Marxist Library. However, we are united in our respect for the work of Karl Marx, and we believe that his work remains relevant today. Our motto is taken from Marx's 11th thesis on Feuerbach, to quote, "The philosophers have only interpreted the world in various ways. The point, however, is to change it." Today's topic is US sanctions and the future of the American empire. Our speaker today is a Bay Area local, the noted political economist, Dr. Jack Rasmus, who teaches economics at St. Mary's College here in California. He is the author and producer of various nonfiction and fictional works, including books, most recently, The Scourge of Neoliberalism, US Economic Policy from Reagan to Bush, which was published on Clarity Press, October 2019. You can find out more about Jack and sign up for his podcasts, which are always timely, relevant, and very interesting at jackrasmus.com. Dr. Rasmus will be presenting for about an hour, followed by a short break for announcements, followed by about an hour of question and answer from the participants. And with that, I'd like to turn it over to Dr. Rasmus. Welcome to Sunday mornings at the Marxist Library.
Good morning. My pleasure to be here. Just a correction. My latest book is Scourge of Neoliberalism from Reagan to Trump.
Okay.
A little bit more timely than Bush.
Okay.
Okay, so we're going to talk about sanctions, particularly the U.S. G7 sanctions against Russia. To try to understand, what actually is being sanctioned, how effective have been the sanctions, what are the exemptions, what's the composition of the sanctions. There's been 6 packages so far, and probably more to come. And what are the consequences of the sanctions, particularly economic consequences, blowback globally here. And in a larger perspective, long term, what did the sanctions represent longer term here about the U.S. Economic empire, U.S. imperialism in the 21st century? To what extent does this represent the U.S. resorting to more aggressive economic war to maintain its global hegemony over the world economy? Is that hegemony actually weakened? We hear people talk about the decline of the American empire. Well, certainly the hegemony is not as pronounced as it once was, and the U.S. is responding here, in some cases quite aggressively, in the 21st century in particular. One of my own theses is that the neocons got their foothold in the U.S. Policy elite here and institutions in the late 90s when Clinton couldn't keep his zipper closed, and they've been there ever since. And deepening themselves in the institutions. And we see that reflected in the policies and adventurous kind of military actions going on. And the economic war is always an element of general military aggression. And we'll talk about that a little bit. So the long term, what do these sanctions reflect? Do they mean something about the U.S. economic empire in trouble? What will happen as a result of the sanctions and the blowback here that's going on, accelerating? So let me just jump into it and give some background here. The objective of sanctions, economic sanctions we're talking about, are clearly to depress the real economy of the target country here. The real economy, and also to engender currency and financial instability within that economy, because wars are really about economics. Often it's who has the bigger economic stick and can hang in there and last the longest, usually wins the war. Short of nuclear war, of course, that's a different perspective. So depress the real economy, cut access of the target country to resources, inputs to the real economy, and intermediate semi-finished goods, very important, particularly when it comes to technology and military goods. Deny access to the target company to sell its goods and services offshore. So, to prohibit imports and to prohibit access to markets, exports. So attacking goods, both imports and exports, to slow the real economy. Denying the country access to foreign exchange, capital markets, credit markets. This is very important in a highly financialized, globalized capitalist economy now in the 21st century. We'll talk about the role of money, capital, and currency in sanctions. To crash the target country's currency exchange rate. In other words, to make the value of its currency collapse. That sort of adds to the attack on exports and imports of goods and credit system and so forth. The currency is very important. And to precipitate, if they can, defaults and financial instability events in the target country. If you look at the Russian sanctions here, there are sanctions on what we call goods and services, exports and imports, which I just mentioned. There are sanctions on individuals, and there are financial sanctions as well that are not so obvious, except for maybe a couple, but which are extremely important. Financial sanctions. And then there's what we might call secondary sanctions, which haven't really been implemented yet. This is sanctions not just on the target country, but sanctions on countries that violate the primary sanctions and still engage in transactions and trade with the primary sanctioned country here. We're not at that stage with these, but that may be coming. And if it does, the consequences for the empire are really severe. So let's look at goods and services sanctions, which may be sanctions on governments and on businesses and on persons. Commodities. Russia is a very important commodity producing country. Commodities are like oil and energy, oil, natural gas, energy sources. Commodities are also agricultural goods, and commodities are also metals, industrial metals of various kinds. And Russia is a very important player in the global economy. It's the 11th largest economy in the world, but it carries a greater weight. It punches above its weight when it comes to these commodities. Now you got to understand, commodities are traded on markets. They are financialized in commodity futures trading. So you've got capitalist speculators who quickly take advantage of supply and demand changes to push up the price of commodities, even before you have actual physical supply effects of sanctions occurring. You will have the speculators, once you announce sanctions, quickly trying to take advantage of it, and usually that advantage is to hold back future contracts and drive up the price of commodities, even before, as I said, you have a physical event occurring, an actual supply occurring. Right along with them, third-party capitalists here in the mix are shipping companies and insurance companies. Commodities are bulk items. They have to be pretty much transported by ship. And you have the shipping industry playing a big role here, another group of capitalists, not just the financial speculators. And you have insurance companies, which insure these ships, play in a game. And when you have an announcement of the possible sanctions by the U.S., not only the speculators jump into gear, but the shippers and the insurance companies jump into gear. Now you got to remember too that the shipping industry was really debilitated because of COVID. They shut down a lot of their ships, and they found that they couldn't get them out of mothballs that quick after 2021. Right? The sailors and the key people who run the ships, skilled people, they went their way too, and it was not easy to get that going. And now, of course, you've got the impact here of the sanctions on shipping. The point is, we're seeing price increases rising significantly for shipping costs and also for insurance costs. The shipping companies made $190 billion more last year than they did the year before. So they're price gouging here, and the insurers are doing the same, and the speculators are doing the same. Okay, so commodities and natural resource inputs are a target of these sanctions in the case of Russia in particular, because it's so heavily involved in that. But there's sanctions on other goods flows too, particularly military components. The military is very much dependent on semiconductor chips and parts and so forth. So the U.S. is playing a major role here, trying to cut that off to Russia. And then technologies of various kinds are also software, not just hardware, are a target of the goods flows, the goods sanctions. But it's mostly commodities and military goods right now. Sanctions on individuals. There have always been sanctions on individuals. I'll talk about the history of sanctions a little bit shortly. But sanctions on individuals are an important element of the U.S. sanctions strategy here. That includes seizing assets of individuals, oligarchs, but also politicians now, and also major heads of corporations in Russia. Even the Russian Parliament, Duma, its members are being personally sanctioned. Personal sanctions mean they're going to seize some of your personal property. We've heard a lot about the yachts of the oligarchs, which are playing cat and mouse around the world, running from the U.S. from port to port, homes in the West, planes, personal planes, kind of hard to prevent seizure from. forcing sales of Russian businesses in the West, forcing divestiture partnerships of Russian businesses in the West, freezing personal bank accounts, access to credit, personal access to credit, travel bans even. These are all sanctions on individuals here. If you want to see the list of the sanctions on individuals, you're going to have to read 858 pages of individuals listed as sanctioned by the Office of Foreign Access, OFAC it's called, that kind of runs the US Sanctions Administration. So sanctions on individuals, as well as sanctions on good flows. I believe the core to these sanctions, however, are the financial sanctions that have gone on. And the US can engage in financial sanctions because it controls the global trading and reserve currency. It dominates the global banking system. It owns and runs through the banking system the international payments system called SWIFT. That's an acronym. And of course, it dominates the IMF decisions and World Bank decisions and so forth. These are all institutions of the global economic empire that were set up right after World War II or subsequently to ensure that the US can maintain hegemony over the rest of the world. Of course, that hegemony has not been absolute at any time. There have always been challengers, and even capitalist countries, they want to go more independent on their own, and they get slapped down. At least historically, they have been by the U.S. But the U.S. has never tried to slap down a country the size and importance of Russia. This is pretty new, and it's really on new ground how well they can do it. But getting back to financial sanctions, what are some forms of these financial sanctions? Well, one is seizing liquid assets of the target country, the government, and individuals that may be residing in Western banks, either in private banks or in central banks. In other words, just to grab those assets, and they never give them back. They get distributed to the banks themselves and their shareholders eventually. A good example was Venezuela gold that was kept in London, was simply seized a few years back, and Venezuela is never going to get that gold back. And what we've got was the seizure from immediately here by the U.S. and banks and central banks of about $300 billion in liquid assets of Russia. Russia, I guess kind of knew this was coming, and it was accumulating assets, including about 130 billion in gold and a total of about $640 billion in near liquid assets. Liquid meaning cash or close to cash, securities that can be converted to cash, or foreign exchange currencies and so forth. I guess it seems to me as a kind of modern piracy, just to go and grab the assets of another country. It reminds me of, the British buccaneers in the 15th, 16th century that would just, grab these Spanish gold ships and keep them. The U.S. is engaging in a kind of piracy here, simply, and seizing these assets. That was a big blow, $300 billion. But not a debilitating blow because, Russia still has $400 billion emergency funds here, liquid assets. Financial sanctions are designed to prevent the target country from obtaining liquid assets or liquid securities with which are needed to do business, just to keep, investment going and operations and production going and importing, buying things and so forth. So a big target of financial assets is to prevent the country from getting access to dollars or other foreign exchange currencies that they need, or getting credit in offshore markets. In other words, blockade, an economic blockade from credit and currency access. So to deny the country the ability to obtain loans in foreign banks And that's going on. The banks have been shut down. The banks are essentially the G7 banks, right? Those are the big banks, US banks. Prevent the country from issuing bonds in Western markets. That would raise cash too, right? You borrow money, you're getting cash. You issue bonds, you're getting cash with which to do business, right? You have to partner with investment banks to do that, that float the bonds. And if you deny access to that, well, then there's no bond financing going on. The same thing with equity financing, stock markets. Right? That's another way corporations raise money. They go into stock markets, they issue money, stocks, and they get cash from the investors. Well, if you delist these companies, Russian companies, from being on the stock markets, then they can't raise money, you see. And a lot of these Russian corporations have been delisted. So issuing new stock in order to gain access to credit and money capital, of course, is ended. And even central banks exchange currencies to each other. These are called swap lines. If I need dollars, I'm a central bank, and if I say Central Bank of Argentina, if I need dollars for a particular project or something, I will give the Federal Reserve, U.S. Federal Reserve, I will swap pesos for dollars for a certain period of time with the understanding I'm going to pay them back in 90 days or something, So swap lines between central banks, Russia's central bank and other central banks have been pretty much closed down. Stock market delisted, no access to bond markets, bank loans. In other words, preventing currency, preventing your money capital with which to keep the economy running and growing. Because the whole idea is to debilitate the economy, the real economy first, because that means people get laid off when businesses can't continue, and laid off people aren't happy. And that ultimately, hopefully, in the strategy results in political instability, which is really the end game objective here. Block U.S. and offshore companies from investing and doing business in Russia, because they're going to have to bring their dollars to Russia to do business. They're going to have to exchange those dollars in the Russian central bank for rubles, because their employees in Russia, they don't, well, maybe they do want dollars, but they want rubles to pay their bills, right? And the suppliers and so forth. So investing in companies just doing business from day to day operations requires foreign currency being brought in exchange for rubles. So the idea is to cut off that foreign currency, cut off those dollars going in there, because if there's a shortage of dollars, then the value of the dollars in the black market in those countries rises, and that depresses the value, all things equal, of that country's own currency. So the idea is to crash the currency as much as you can. Pressure corporations, U.S. and other corporations in Russia doing business there, pressure them to leave, to shut down temporarily at least operations, or to divest themselves, sell off, and or leave. And the figure thrown around is about 1,000 U.S. companies have announced that they're going to leave Russia. Now, whether they're just announcing that, whether they're just suspending, whether they're actually leaving is another question. Right? Well, McDonald's is leaving, and McDonald's has been bought out by a Russian company who's going to continue the operations. So getting them to leave is another way of cutting off currency flows into the country as well. Blacklisting U.S. and other investors from investing in Russia's sovereign wealth fund is another way of cutting off. And once again, cut off the money flow, whether the money's flowing into actual production, real economy, or flowing into financial markets in Russia. Shut down bank-to-bank transactions. Over the last 3 months, this has been occurring in stages and steps. At first, the key Russian banks, particularly Gazprom, which handles all the transactions for oil and energy, were exempted from the sanctions. But slowly those screws have been tightening a little bit more. Gazprom, of course, has set up other companies with which to do it. And the West has looked the other way because Europe is still dependent on oil and totally dependent on natural gas from Russia. We'll talk about that. The US sanctions have even gone so far as to get credit card companies, Visa, MasterCard, and others, to shut down their availability in Russia. Of course, that's another way of preventing money capital flows to consumers in Russia. Deny trade credits and trade insurance for Russian ships, right? The US is even taking action to prevent Russia from making payments on its sovereign bonds to Western investors. You would think the capitalists would say, okay, well, you can pay the capitalists, but it's even trying to shut that down and shut down trading and transaction in what's called secondary debt, Russia's secondary debt. And then finally, financial sanctions involve banning Russia and Russian companies from access to the SWIFT, International Payment System. What is SWIFT? This is a very important institution of US imperialism. US dominates it, US banks dominate it, and it's essentially a way of banks messaging each other, saying, okay, here comes some money, Bank Chase says to, Bank of Singapore, here comes some money, tell me that you're waiting for it, here's the encryption and so forth, that messaging is very important. But the thing is, there's a record of all that messaging, and US banks being at the center of the SWIFT system, they can see who's messaging who on behalf of what transaction. So without the SWIFT system, the US can't identify what third-party countries are violating the sanctions. It's a key way of them identifying who's going along with the sanctions. Very important. We might add in this categorization of sanctions also what might be called secondary sanctions. That is, sanctions imposed on countries, third-party countries, that don't go along with the primary sanctions on Russia. That has not actually occurred yet. That is a sea change in sanctions if it actually occurs to any great extent. I mean, you could play that game with small countries, even like Venezuela and so forth, where 95% of all their budget is determined by their oil sales. But you can't really play that, I don't think, with a country like Russia, even less so with a country like China, which I'm sure is watching these sanctions quite closely here. And it's actually also a big backdoor for Russia exports of its energy and its other products as well going on. And that's giving the US fits. Relations with China are deteriorating as well. We're in the early stage of an economic war with them. We are full out in an economic war, US is with Russia here. Okay, so those are the categories of sanctions: good sanctions, individual sanctions, financial sanctions, secondary sanctions. Now, the US has had a long history of sanctions, not quite at the quantitative, qualitative level that we see here today with Russia. This is new ground, but the US has always used economic sanctions as part of a political aggression. Most notably, people aren't aware, Americans aren't aware, the US employed some very serious sanctions against Japan in 1940-41. Japan was very dependent on a lot of US industrial goods, and right after the election in 1940, in particular, FDR began cutting out those exports of metals and so forth and oil to Japan. But the big squeeze on Japan came in, I believe it was August or September of 1941, where FDR pretty much blockaded Japan from accessing Southeast Asian oil. Japan its army was deeply involved in China at the time. And from what I've read, it had maybe a month and a half of oil left for its army by October 1941. And it was at that time FDR told them, we only lift the blockade if you withdraw totally from China. When the U.S. wants to go to war, it makes an offer you can't accept, right? We saw that with Iraq and others. That's a signal that the economic war is about to become a hot war. Well, at that time Japan decided to go to war with the United States, and actually within weeks, launched its fleet against the U.S., against the Philippines, and Southeast Asia and other places. Okay, so North Korea, USSR, China, U.S. has had different kinds of sanctions throughout the post-war period. Cuba, of course, we know, some serious sanctions. And then Iran, with the recent, differences with Iran and the Syrian war. The U.S. even has sanctions against the Palestinian Legislative Council. And then, of course, there was Venezuela, the dress rehearsal here for what's going on with Russia in terms of sanctions. At least 25 countries today are worldwide are still subject to U.S. sanctions, but these are partial sanctions. These aren't anything like we're seeing now. If you look at sanctions in Russia, they really began to ratchet up after the 2014 coup in Ukraine, which, of course, I presume more politically astute folks like you know was engineered pretty much by the U.S. State Department and the CIA quite successfully. The first coup attempted 2004 or 5 with the Orange Revolution only resulted in a stalemate between pro-Russian, pro-U.S. West forces. But 2014, with the help of fascist ground forces, which have always been in Western Ukraine, they pulled off the coup there. And immediately Ukraine, with the help of the U.S., began trying to take back the Donbass provinces there, Luhansk and Donetsk, and actually invaded those provinces. And then Russia, of course, intervened on behalf of those provinces in 2015 and 16. And then, at that particular point, the sanctions began to ratchet up quite a bit. The war was really about to begin. If you look at the Rand Corporation and some of those other sources in the U.S., they were planning what's going on now with Russia. They were planning to turn this thing into a physical conflict. I believe it was shelved when Trump got elected, and then quickly, brought off the shelf here in 2021 with Biden. And late last year, steps were being taken to provoke Russia into an invasion. And of course, that proved a successful provocation. I believe that's also why the U.S. Quickly got out of Afghanistan, cleared the deck. Of course, Putin did invade, probably thinking better to confront the U.S. on proxy ground of Ukraine now rather than doing it on Russian ground later, after the U.S. destabilized Belarus and Kazakhstan and so forth. Okay, so but that's political. But the point is, what we got was a sharp increase in sanctions beginning late last year, and even before the February 24th invasion, the U.S. Introduced its first of 6 packages of sanctions. It succeeded in banning Nord Stream 2 pipeline from becoming effective. 5 oligarchs were targeted, 2 banks, and U.S. business investment was prevented from investing in the eastern Ukraine. You got to understand too that U.S. Corporations, capitalists, got deeply involved in the Ukraine after 2014. Virginia Newland, the Undersecretary of State, a neocon in the purest form, who engineered that coup, bragged about $5 billion being spent on it, is really a finance capitalist. She's really out of Chicago. She was the CEO before she came of an equity firm or a hedge fund, I forget which one, that before she became Undersecretary of State for Eastern Europe. And once she pulled off the coup, she got herself appointed the czar of the economy in Ukraine. They even waived the requirement you had to be a native Ukrainian for the position. They waived it, gave her honorary citizenship. And then U.S. businesses began to flood in to Ukraine big time, partnerships and acquisitions and so forth. So the U.S. is deeply involved in Ukraine economically, has a lot of interest there since 2014. And of course, where the capitalists go, the U.S. military advisors follow very quickly. Okay, so back to the phases here. Even before February 24th, we had this first phase, which was designed to try to warn Russia, don't do it, don't do it. Of course, they were quite feeble, and Russia, wasn't going to be deferred from invading just based on that. The other 5 packages so far ratcheted up the sanctions being on banks, meaning no transactions, right? No asset flows, no business transactions. That's what sanctions are about in the banking sector. More sanctions step by step on oligarchs, on Putin and his family and friends, on the Duma, on government agencies, on managers of large corporations, sanctions on Belarus because of its involvement there, technical military import components, chips, and so forth to Russia. We talked about some of the other sanctions in the last 6 months or 3 months, 6 packages already. The asset seizures, SWIFT denial, SWIFT system denial, and so forth, right? It's interesting to note, though, the big target for sanctions are Russian energy, oil and gas, right? That's where Russia makes its big revenue. And like all business, you can make revenue by selling more of it. You can also make revenue by selling less, but raising your prices. So as they impose sanctions on oil and gas from Russia, yes, the flow has of those goods has declined, except for gas, it really hasn't. But the price has risen, and net, Russia's probably making more revenue from oil sales, even though it's selling 2.5 million barrels fewer per day to Western Europe. Natural gas, apart from closing down Nord Stream 2, which was really not responsible for any flows of Russian gas into Europe, there are at least a half a dozen pipelines going to Europe, some of them right through Ukraine, which are not touched, by the way, by the war, and through Turkey into Italy. Natural gas flows are continuing. And Europe, is heavily dependent on natural gas, Russian natural gas. And there's no way that the West can really sanction natural gas without shutting down Western Europe. And it's very hard to get additional production of natural gas elsewhere. There's some natural gas that comes from Algeria, but that's maxed out. There's natural gas they can get from the UAE and Qatar, but that requires an increase in production facilities, which take at least 2 years to expand. You also need, if you don't have pipelines, you need to ship this gas by liquid natural gas, LNG ships, which are very specific, built for just natural gas. And there's a shortage of those ships globally. And there's also a shortage of LNG ports in Europe. I think there's only 1 or 2 ports. There's 7 or 8 ports in the U.S. The U.S. would like to ship natural gas to Europe. That means they sell more of nat gas to Europe, and those companies, which are the oil companies, make more money. They also make money by creating a shortage of supply to the U.S., and the price of natural gas goes up in the U.S. So they make money in both ways, you see. But there's a problem of port capacity and shipping capacity that even Europe recognizes, and the U.S. recognize, and Europe has indicated they're going to get off Russian natural gas in 2027. So effectively, there's no change in natural gas. Now, oil exports from Europe, from Russia, is a different question. The U.S. has banned importing Russian oil, which was just maybe very small, 5% of U.S. production. That's been prohibited. It's harder to cut off oil from Europe, and Biden has been doing his best to get Europe to do that. And he's only been partially successful. Hungary refuses to participate in that. I think Serbia is also in that category. I'm not sure. They're pressuring Serbia, a small country, to that extent. But you got to understand, even the EU recent agreement to ban Russian oil imports has not even started yet. There's a 3 months exemption, and it starts later this summer, and it's phased in through the rest of 2022. So the immediate effect on Russian oil imports to Europe, has not even begun to have an impact. That doesn't mean that the price of oil is not rising, even though the physical supply has not really been restricted as yet. The price is going up, again, because you've got these international players, these speculators, these shippers, these insurers who are all involved, and they're jacking up the price already. It's not just the physical supply, it's capitalist global finance that's really responsible here so far. And we see what's happening to those prices so far. Just wait until the real supply, physical supply, begins to hit. The prospect for energy price rise in the U.S. is really scary. We're already seeing huge increases in gasoline and even more in diesel. This thing can only get worse. And at least half of the U.S. Consumer price inflation is energy prices driving the whole thing. And we've seen the last 3 months, it's well over 8% every month. So that's a clear trend. And I think that trend's going to rise here over the summer. It should have Biden and Democrats very, very worried, which they probably are, but they seem to be blocked as inability to do anything except for Biden to come out and castigate the oil companies and the shipping companies, saying, you're price gouging, you're price gouging. Okay, Joe, what the hell are you going to do about it? Nothing really, except talk. Okay. All right, so we talked about oil and gas sanctions here. You got to realize that also, and the exemption, by the way, total exemption so far on nat gas, partial time exemption here and some countries exemption on oil. In the meantime, the price goes up and Russian revenue goes up from it. Industrial commodities, very important sanction target from Russia, in particular certain industrial metals like nickel, which is central to production of batteries. And if you want to build more electric cars, you're going to need more batteries, you're going to need more nickel. Palladium, which is critical for auto and truck catalytic converters. Aluminum for airlines and autos, and certain steel alloys used in the production of advanced steel products here by U.S. steel companies. Those are all also traded on global market exchanges, futures contracts for all of these metals, London Metal Exchange, for example, right? and they're all critical, and they're all rising. And they get passed through in terms of the cost and the price into a whole host of products that are sold to consumers as well as other businesses. And then thirdly, we have agricultural commodities, very important. Wheat being maybe the most important. 30% of the world's wheat production comes out of Russia and Ukraine, 30%. That's a large number. And of course, it's not just the sanctions that are disrupting that supply, but it's also the war disrupting it. As I've read, there are warehouses full of wheat in Odessa, the main port in the Black Sea for Ukraine, that are just not getting out because the whole damn harbor is mined here. And you're not going to get too many merchant marine sailors and ships going to want to go into the Black Sea through those minefields to pick up that grain. And you're not going to get insurers, shipping insurers, who are going to provide a fee that any shipper can pay. They could open up those ships, but nothing's going to happen because of the mines. And Ukraine's worried that if they release the mines or pull back the mines, that then it's going to be easy for Russia to invade Odessa from the sea, which is the next phase probably of Russia's military campaign. So wheat's very important, and it really impacts certain emerging market economies, very, very dependent, particularly in North Africa and the Middle East and East Africa, very dependent on that 30% world wheat exports, like Egypt and places like that, like 89% of all their wheat comes from the Ukraine and Russia. And other countries in North Africa, just about every North African country is dependent. Ethiopia is very dependent. Turkey's dependent. Even Pakistan and India. So that's driving up food prices in countries that can't afford those food prices. I mean, they're all on the margin anyway, and the government is subsidizing some of those basic foodstuffs and bread. But the government can't afford to continue subsidizing at an increased rate. So what you got is starvation. The prices have risen in Egypt and places like that over 50% for baked bread and bakery products. I mean, starvation is on the agenda in those countries. You can see the tip of that iceberg with what's happening in Sri Lanka and other places. That's really what's going on here. Pakistan, Libya, Ethiopia, Israel, even Jordan, UAE, Iran, Tunisia, Sudan, Kenya, they're all dependent on Russian Ukraine wheat. Corn, 20% of the world production of corn comes out of Ukraine, Russia as well in the Black Sea, 20%. It's a low quality corn, mostly used for animal feed, right? But 20% of animal feed, corn animal feed, that's quite a large number. And as you don't have the animal feed, then the farmers have to cull their herds, and that means a less supply of meat, and therefore a rise in the price of meat in the West, which is going on. Okay. And substitute price effects and complementary price effects I'll talk about shortly as well. Sunflower oil, 75% of the world's sunflower oil comes out of Ukraine and Russia. Well, what's sunflower oil? Why is that important? Well, it's cooking oil, right? There's palm oil, there's other oils. But if you have a shortage of sunflower oil, then the price of substitute products like palm oil is going to go up as well. And palm oil is used in just about everything, all kind of processed food stuff. And then you got potash, which is a natural fertilizer. A lot of it comes out of Belarus and Russia through the Black Sea. 75% of natural fertilizer. Well, they're just beginning the next planting season. And if you don't have fertilizer, then there's going to be less planting and therefore less supply of food in the fall, and therefore higher prices of food in the fall. Still overlaid on, the existing harvest, not getting out to these various countries. And there's also substitution effects going on here, price effects as well, because if the price of potash, natural fertilizer, goes up and there's shortages, then the substitute product is chemical fertilizer, and the demand increases for that, and those prices go up. And on top of all this, very clearly now, there's a drought in the Western US, and there's a drought in Europe, so that you're not going to have the replacement production of these grains and so forth coming out of the US and coming out of Europe. The only other places where there's a significant amount of wheat being produced is Australia and Brazil. And as the shortage grows, these countries are going to start hoarding for their own populace, just like India is now for wheat. And that's going to reduce the global supply and therefore raise the price. Speculators and so forth to drive up the price. So you got a perfect storm going on here of supply and demand forces that are driving up world agricultural commodity prices. Sanctions allies, the US, behind the US solidly, of course, is the EU, except for some countries, Canada, Japan, UK, America's little puppy, UK, Australia, New Zealand, Korea, in other words, the G7, G10, whatever, they are all behind the sanctions. But you look at the rest of the world, there's not unanimity going on, apart from China and India not going along with the sanctions. This recent UN vote here that they had, General Assembly vote on the sanctions, well over 100 countries abstained. They would not vote with the US. They abstained from it. And that includes about half of the African countries and a large number of Latin American countries as well. So, that's kind of a harbinger, of whether the US can impose secondary sanctions. I don't think so on the rest of the world if they don't honor the primary sanctions that have been announced, right? Okay, exemptions to the Russian sanctions are significant. As we said, there's no natural gas exemptions. All the pipelines are flowing, and it won't be until 2027, right? And I explained the problem with the shipping and the ports. Qatar, Algeria, and Nigeria are taxed out on production levels. Gazprom is still functioning, I believe, when it comes just to the energy. Oil, well, we talked about that as well. What the US is trying to do now is, in a kind of act of desperation, is to form what's called a buyer's cartel among the G7 countries. It's trying to get the insurers, in other words, when it comes to oil, to refuse to insure shipments of oil to secondary countries, right? Secondary sanctions, in a sense, right? It wants to cut 3 million barrels of oil per day produced by Russia going to emerging markets, right? Its goal is to cut 2.5 million out of Europe, which is having some success to begin with. And it wants to cut, another 3 million. Russia produces about 9-10 million before the war, and COVID, 9-10 million barrels a day. Is the second or largest producer of crude in the world. The US being the number one, and Saudis being next. So they want to cut 3 million barrels. The US goal is by getting insurers to refuse to insure shipping above a certain amount to emerging markets. It's been estimated if the U.S. is successful in that, cutting 3 million barrels of Russian oil from reaching alternative customers in the world, that will drive the price of crude per barrel up to $200 per barrel. You know, we see what's going on now at the pump with $120 per barrel. You know, they want to almost double that. If that should happen, it'll be kind of a contest between what's going to cost more, a loaf of bread or a gallon of gasoline here by the end of the year. Okay, so we talked about the exemptions to oil, total exemption to gas, right? What about industrial metals? Well, the U.S. has quietly exempted American companies who are dependent upon certain imports of nickel and palladium for nickel for the auto companies, right? Alloys that are used in steel production for the steel companies. You don't hear much about that. You're not going to read about it a lot in the New York Times, but those exemptions exist for certain U.S. companies, right? No exemptions for U.S. Consumers, of course. And I've also heard that potash is being shipped, not through Ukraine to the Black Sea, but being shipped through Poland to the Baltic, right? So that sanction is not working all that well, right? The goods flows most effective in the sanctions on Russia, machinery and appliances worth 42 billion, electronics, 30 billion, chemicals, 29, transport, metals, plastics, some instruments, mineral products, military. I can't find any data as to how much of that military components. I suspect that's kind of primary focus of the U.S. Commodities, of course, we've talked about those. What are being effective? Individuals, particularly targeting London and Switzerland, where a lot of Russian wealthy people keep their money. Also in Cyprus, they keep their money. So they're targeting that. Personal oligarchs, politicians, bank managers, CEOs, groups, and entities. That was not just individuals, but it's groups and entities that are on what's called the SDN list, socially designated individuals or something like that, and others, blocked persons. And as I said, it's a list of 1,858 pages long on how their assets, personal assets, are being frozen, being seized, transactions being blocked from engaging in transactions, and even banning their travel. What have been the effectiveness of these sanctions? Let's get to the meat of it now, right? How effective have they been? Well, we know that the pre-2022 sanctions had minimal effect. Russia was pretty much able to get around it through financial means. Well, what about the oil sanctions, which are really designed to prevent Russia earning revenue from the sale of oil needed for its economy, right? We have a US ban, we got a partial ban in Europe, not in effect yet, right? We got this insurer's cap that's being proposed that so far the EU will not go along with, because it means secondary sanctions, and the EU does not want to engage in secondary sanctions on the EME countries. Well, Russia has rerouted and it discounted its oil. It's discounted a barrel of oil 30% below the global market price right now. So it's very attractive, for India and places like that. They just buy a whole bunch of alternative Russian oil right now, and reroute. Russia's rerouting it through China and other places. It probably will. Well, I believe it was already building a pipeline. I don't know if it was a gas or oil pipeline to China, and we're going to see a lot more of that going on. And it's making the U.S. apoplectic here about China, not agreeing to any sanctions and actually helping Russia. But China, certainly is looking at all this and said, oh, well, Russia's got this Ukraine thing. We got the Taiwan thing. We're probably next. Taiwan is going to be our Ukraine. So I'm sure they're making preparation for it all. And they're not going to abandon the Russians since they're in the same boat. Pipelines, virtually exempted, existing pipelines, right? Pipelines are full. Russia response, still sending gas through pipelines, and its response has been also, you got to pay us in rubles now. We don't want your currency. We don't even want dollars. We want rubles. Well, why did Russia do that? Why did Russia say to Europe, you want our gas? You want our oil still? You got to pay us in rubles. Because if they got to pay in rubles, then these countries have to go into money markets and they got to buy rubles in order to pay Russia in rubles. They got to go on foreign exchange markets and buy rubles. Well, you increase the demand for rubles, you drive up the value, the price of rubles, right? And that's how Russia has reversed the initial 30% decline in its currency here. A currency that's collapsing, no one wants to trade in it. It's very difficult to do business with a country whose currency is in free fall. And that's not good for its general economy. So a country doesn't like a collapsing currency. If you're part of the US economic empire, if your currency collapses, you can always go to the IMF and get a loan, right? But IMF is not going to give Russia any loans, that's for sure. Well, Russia has turned that around pretty well, and the ruble has been appreciating. It's one of the strongest currencies out there. That's a big failure for the U.S. sanctions, I would say. Inflation is reportedly running around 16-17% in Russia, but it was on a base of 8% anyway before all this began. So, Russian inflation at 8-9% because of the war and the sanctions is no different than the increase in inflation in the US of 8-9%, in Europe 8-9%. So, in other words, the inflation is a result of the general global economy. It's not the consequence of the sanctions per se. So that hasn't been that effective. Credit, shut Russia out of the credit markets, bank loans, bonds, equity listing, and so forth. That has been effective. They have been pretty much shut out of the major Western banks and markets, credit markets. But, keep in mind, it's selling more oil revenue, and it's still sitting on 300 billion plus emergency fund here that they've, and 120 billion in gold that they've been accumulating before this, right? Shut out, is Russia shut out of markets in the West for raising buying foreign currencies? Yes, they have been. But they're turning to selling more in rubles and even China yuan and even bartering with countries. So they've offset some of that to some extent. What about corporations leaving? Yeah, McDonald's, Coca-Cola, and others have announced they're leaving. There's quite a few of them. It's hard to tell whether these are just announcements or temporary suspensions of businesses or actual exits. In the case of McDonald's, it's an exit, of course. But Russian capitalists are moving in, buying up these corporations, and probably getting very, very nice loans from Russian banks to do so. Since Russian banks have all these liquid assets that they're not sending abroad anymore. Asset seizures, yeah, they've lost 300 billion. They'll never get that back. And of course, there is unestimated amount of seizures of physical assets, businesses, and so forth, and forced divestitures of businesses and assets going on in the West as well. Slow down the real economy. Has the U.S. been sanctions able to do that through all these various means? And yeah, they've got some inflation. Yeah, they raised their interest rates significantly in Russia in response to the inflation, just like the US and others are doing, and also to protect the ruble, which has been successful so far, right? But now it seems that they don't need to do more of that because raising interest rates slows down your domestic economy. And we actually now see a brief small cut in the central bank interest rate. Okay. Military components, have they blocked those from Russia? I can't find any evidence. Probably so. I would think so. Right. Russia has engaged in some counter sanctions of their own here. Gee, I'm already over an hour here, but let me try to talk about the meat a little bit here. Some of the blowbacks, right? Economic consequences. Well, the obvious one is inflation, right? It amazes me when I think about it, that the US and global economy was battered so badly by COVID and the shutdowns. Why the hell would the American elite jump right into this other major risky event of sanctions and war? I mean, what are these guys thinking? They weren't thinking too far, but that's typical of neocons. They just think of the political objectives and they don't think about the consequences. To overlay this inflation, which is leading to a recession here, I've been predicting since late last year. Just a question of how soon and how much. There'll be no soft landing. The Fed's going to raise rates, 0.5% here several times. As inflation continues chronically over the summer, they may even increase that rate to 75 basis points instead of 50. The solution the American elite has for inflation has decided on is let the Fed engineer a recession. That's the only way we're going to get this down. In other words, destroy demand for what is really a supply problem. Destroy demand. Just as it did, same thing it did in 1981, 82, when you had a supply problem because of oil. They went after households and consumers, raised interest rates to 18%, and shut down much of the goods producing economy. Terrible recession, terrible unemployment. And yeah, they shook out the inflation. In other words, the consumer paid for the inflation that was due to forces in the Middle East, OPEC, and the U.S. oil corporations. Well, they're doing that again, right? Inflation now is 8 to 9% CPI. Gas prices up over 50%. Food prices 10, 15%. I gave a presentation on my own radio show, Alternative Visions, last Friday called The Anatomy of Inflation. You may want to go and listen to that on the Progressive Radio Network. It's a podcast. You can access it as well starting tomorrow from my blog, jackrasmus.com. Inflation is chronic. Producer prices coming behind are even higher than consumer prices. They're in the 11 to 12, 15% rate here. So that's going to work its way through. Biden's move to do something about energy inflation has been pathetic. He announced the release of some strategic oil preserves, a petroleum reserve of the U.S., like 5% of the 650 billion barrels, nothing. He's going to hold auctions. And who's going to come to the auction? The U.S. oil companies. And they're going to buy below market prices of oil from the strategic reserve, and they're going to keep their own oil equivalent amount in the ground, So it's just a boondoggle, really. If you look at U.S. oil corporations, they won't increase supply. They're making huge profits, and they like it the way it is. They were producing over 13 million barrels a day before COVID. Now they're barely producing 11 million per day, and you don't see much of an increase in the drilling rig number going on. So that's just a cover. U.S. oil companies are responsible to some extent. Biden made a brief initiative to get Venezuela to release more oil. Of course, that flopped quickly politically in the US, but the whole objective there was to allow Venezuela to send more oil to Europe, which is what it's doing. There was an attempt to approach Iran. That fell through because of political opposition. And now Biden's going hat in hand begging to Saudi bin Salman here to please produce more oil, and bin Salman is probably just chuckling behind his teeth here, I got the US by the short hairs. And he'll do some token stuff, but they're not going to, I mean, they enjoy the price hike as much as the US oil companies do, and Russia too, right? Rest of us pay for it. Inflation, energy inflation is now spilling over into other goods. Transport costs are rising here in the US. We know here in California Bay Area, it's $7 a gallon. Diesel's even more. Well, shippers, truckers, they're going to start parking their rigs, right? And at that cost of diesel, are they going to really sit in line 2 hours in the LA port where you can pick up a container? I think a lot of them are going to just, park their rigs until the price comes down, the cost of gas. And that's going to, of course, mean more good shortages. We're going to see more shortages of actual goods here appearing, I believe, if this inflation continues to go on. Gas rent prices up 15% recent. Utilities up 30%, car prices 20-30%, airline prices 1 month went up 18.6%. Hotels, public transport, food at home, not just restaurants, but food at home, eggs going up 33%. Meat 14%. This is over the year over year. Milk and bread 15%. 5 of every 6 items in the consumer price index are increasing at double-digit rates. 5 of every 6 items, right? So there's no slowing in sight. And Janet Yellen, who predicted 2 months ago, it's going to be short-lived, recently had to eat her words and say, okay, I was wrong. It's not going to be short-lived, obviously, but it's not going to go on for a decade. Well, thank you, Janet. What a forecast. Yeah, I can make that forecast. Well, I wouldn't dare. It's so silly. Okay, the real economy, the impact on the real economy. Inflation rises. The Fed, as I said, they've decided, policy elite makers in this country decided, yeah, we're going to deal with it. We're not going to impose price controls like FDR and Truman and even Nixon did, right, on key items. We're not going to do that, right? We're not going to slap an emergency surtax on the big wealth of shippers and oil companies and then redistribute it to commuters. We're not going to do that. There's so much they could do, but they're not going to do it. They're going to have the Fed engineer a recession. Now, when Fed raises rates, the dollar goes up in value. When the dollar goes up in value, other currencies in emerging markets go down in value. There's a reciprocal relationship, all things equal. So it's even going to be worse for emerging market countries. They've got the same inflation and energy and so forth we're all experiencing in Europe and the US, but on top of that, their currency is collapsing. And that means they got less money to buy incredibly rising prices of these commodities. You're going to see outbreak of political instability in emerging market countries here. As I said, Sri Lanka is just the tip of the iceberg. Europe is going to start raising rates too here later this summer. They're well behind the curve. They're even more impacted by energy and industrial commodity prices, metals and so forth than the US. The US economy contracted the first quarter by 1.4%. St. Louis Fed predicts just the growth in the second quarter of 0.9%. I think it'll be even less than that, right? The Fed's going to raise interest rates by 50 basis points at least 3-4 times in a row. Now that's going to it's already having a negative effect on the housing and construction and commercial property markets. The tech industry is announcing hiring freezes. They're going to start laying off. Consumer spending is flat. after adjusted for inflation. Business investment is not going on with small and medium-sized companies. Government spending, there's not going to be a fiscal bailout. They just did that, with COVID. And now they're raising defense spending. So you think they're actually going to, in this next recession, try to bail people out? No way. It's going to be even worse and therefore more protracted. Deficits are still $1 trillion a year. Net exports are negative. And we're beginning to see a job creation, which is a lagging indicator, 6 to 9 months, already beginning to slow. What this means is stagflation. You got inflation, you got recession, you got stagflation, and you're going to have problems that will emerge as a result of defaults in financial asset markets. And companies, zombie companies, junk loan companies that got away for years with virtually no interest payments. They just kept rolling over their interest payments. Their debt payments are now going to have to pay more to get rolled over. They're not going to get it. They're not going to get the rollovers. They're going to default. They're going to go under. And we don't know what the chain contagion reactions are going to be from that yet. We'll see. Okay, final point, consequences for the U.S. empire. The U.S. dollar is the linchpin of the global U.S. imperial empire. It's the linchpin, and it's under trouble. Oh, short term, it doesn't look like it, because when you got a global economy slowing down and all this uncertainty, investors around the world send their money to the U.S. and buy safe securities, becomes a safe haven, drives up the value of the dollar. But underlying it is this real challenge to the dollar as a result of sanctions against Russia and against China coming, and warning to other markets and countries. What you're going to get is a bifurcation of the global trading system. And if that happens, that means there are going to have to be alternative currencies that will be used, and an alternative international payment system. And should that happen and that break off, probably led by Russia and China together, there will be those who will join it. And that has major consequences for the U.S. Global economic hegemony. You'll see other institutions that will grow, alternative institutions to the institutions the U.S. has used to help it maintain the global economic empire it's had since the 1946. So there's some real threats, and with the weakening of the economic empire comes political bifurcations and political instability, and more countries will go independent. And you can see maybe a harbinger of those possibilities already. The recent LA conference here on immigration, half of Latin America said, thumbed its nose to the U.S. and said, we're not coming. Or they came and made some nasty speeches. I mean, this is like unheard of in Latin America. And of course, Africa is splitting. Many of them are going their own way as well. It's the beginning of the decline of the U.S. economic empire and political hegemony. But that decline is not, I wouldn't overemphasize that. That decline is not accelerating. And in a crisis stage right now, and the U.S. is responding back more aggressively. The U.S. is like a wolf that's cornered, and a cornered dog or a wolf will snap back at you. And if you push it too far, it will maybe even lunge for your jugular. But that's kind of what the U.S. is in now. And the quality of the U.S. political elites is astoundingly low in the last couple of decades. I mean, you just can't imagine what U.S. capitalists and their advisors and elites did after World War II and in the 50s and even 60s. You can't compare it to these lightweights that we got. I mean, look who they're producing, and look at the decisions that they're making. Wacko Trump and, corporate Joe Biden, who still thinks he's back in the Cold War, right? and those behind them. And the two political parties are slowly fragmenting and imploding, I think. Domestically, everyone knows of the splits and everything going on. The democracy, what little there is being chipped away. Can the elites, this poor quality of elites, with the tools they have, actually save the global economic empire here, or restructure it? Do we have a Diocletian here? Emperor Diocletian in the third at the end of the third century, Roman emperor there. After 75 years of chaos and collapse, he finally puts it all back together for a little bit. Is there a guy like that, to use the analogy, around the corner? I don't see him. I think American elite and capitalists are the quality of leadership, and what they're coming up with is really something to be desired. And you see it with the sanctions, coming out of the global economy being fragmented and wounded by COVID into shutdowns, the war of nature against us, that war, which isn't over. And now you start another war, a second front here, an economic war, with the Ukraine. There are signs, however, that the U.S. and Europe are having second thoughts about Ukraine, as they are obviously, the Ukraine forces are being debilitated and probably will collapse in the next 90 days. The U.S. is looking for a compromise and a way out. They're quietly talking now, and we may see some dramatic moves before the end of the summer. Okay, that's it. I took longer than I thought. Oh my gosh, I took much longer. I'm sorry. I hope it was worth it.
Oh, thank you, Jack. Very, very informative and very much appreciated. What we're going to do now is we're going to take a short break, make a few announcements. I'd like to ask people to go to the reactions button in the lower part of your Zoom window and raise your hand if you have questions. And we'll try to call on people in the order at which you raise your hands. In the meantime, I just want to make a few quick announcements about upcoming programs. On June 19th, next week, we're going to have a program on Roe v. Wade to be abolished. The speaker is going to be Rosa Astra from the Party of Socialist Liberation and a writer for Liberation News. So we're going to be talking about some of the changes in the Supreme Court and people on the streets related to Roe v. Wade. On June 26th, we're going to have photojournalist David Bacon speaking on his recently published book on the border, More Than a Wall. And David has spoken here at the library several times, does some great work, photographic work, and kind of on the ground reporting on the border situation. It should be really excellent. And then on July 3rd, we will have John Parker will be speaking about his recent visit to Donbass in eastern Ukraine. And I don't know how many of you have seen his reports back on YouTube, but very rare and interesting on the ground reporting on what's actually taking place there from the point of view of the population. So with that in mind, I'm going to ask people to sign up for our mailing list. Go to our website, ICSSmarks.org. Sign up and you'll receive email notifications for these programs, some great stuff, and other things coming up in the future. Just a real quick announcement from Richard. If you would just make a quick fundraising announcement, we'd appreciate it. We need to unmute you. There you go. Just make a quick announcement,
Okay.
please.
Thank you. Yeah. Please take a look at the chat. There's some information on how you can help us financially. As you know, we're going to be doing a sort of complicated technological feat of having hybrid meetings at the Marxist Library itself. We're going to stop being quite so virtual and become more materialistic, which is always our our Marxist intention. So please contribute to those expenses, and I return it to Alan.
Thank you. You can get information about donating also on our website at ICSSmarks.org. There's a little menu choice to the right on donating. So why don't we start off? And again, I just want to encourage everybody to go to the reactions button, raise your hand if you have questions, comments. We're going to keep them to 2 or 3 minutes apiece. And we'll start off with Raj, followed by Janet. So Raj, please go ahead.
Jack, thank you for a very informative lecture. Information that you provide is very valuable. I see you as a political economist, not just an economist. And so I assume that you're familiar with Lenin's thesis on imperialism. And imperialism is a special stage of capitalism with 5 different characteristics that Lenin identifies. So I want to ask you, how do you see there is, your lecture is on sanctions and economics, which is very valuable, but my question to you is actually crosses over to politics. The two are, as Lenin said, politics is concentrated economics. So, so the question is, do you see Russia as an imperialist country and this as an inter-imperialist war? And given your solid foundation in economics and political economy, rather than purely from partisan politics, how do you see this war? I mean, you have implied this has been planned by the United States to basically push against Russia, and Russia finally had no room left and reacted, which is Putin's. I listened to two of Putin's 2007 speech in Berlin, in Germany, and his speech just before Russian military operations began. So I want to I want to understand from your study of economics and political economy, how do you see it? Thank you.
Yeah, well, it's a good question. It's a question of the day. I've recently written a couple articles on this. In late January, I wrote a piece. It's on my blog. It's on Counterpunch and Worldview, Political Economy, and other places. That was entitled 10 Reasons Why the U.S. May Want Russia to Invade Ukraine. Identified why the U.S. baited Russia and actually welcomed the invasion. What was to be gained by the U.S., very significantly gains, both geopolitical and economic, not least of which is to drive Russia out of Western Europe's economy altogether, so the U.S. Energy companies and other companies can just jump into the vacuum and enjoy the gains, economic gains, but also to use the invasion to shore up U.S. hegemony over NATO, which was shaken under Trump, where Germany and France were beginning to look like they wanted to be a little bit more independent, within NATO. Well, that's been pretty much eliminated by the U.S. axis with the UK and Eastern European recent entrance to NATO. U.S. has reestablished its control over NATO soundly. That's a big gain. That's a geopolitical gain. Economic gains. I'm not going to go over the whole list of 10 here. Just you can also read it on my blog, jackrasmus.com. And then I followed that up, more pertinent to your question, with a piece sort of taking issue with those on the left who are saying, plague on both their houses. They're both capitalists. They both got oligarchs. They're both imperialists. We should rely on the workers. I mean, to me, that's a naive, easy way out. To me, the main danger here is American imperialism entering an aggressive stage. We can see it occurring over the last 2 decades, but now this is a qualitative, leap into a more aggressive mode here, even willing to risk, a confrontation, although they, tactical nuclear, although they've been very careful so far not to do that. And it looks like they're now going to pull back. But it's American imperialism that is the true enemy here. Advancing, revanchist, since 1999, marching into Eastern Europe and wanting to go beyond and trying to destabilize Russia in all different kinds of ways. It's not an equal blame kind of situation. I mean, is Russia imperialist? Russia can't even hold on to what it has. It inherited the USSR, if you could say, an imperialist that had gone so far and then stopped in Eastern Europe. But it's certainly not imperialist. It's capitalist. They got oligarchs. Does that mean because they're capitalists and oligarchs, you can't take a stand against the real danger, U.S. imperialism? Well, someone on the left would argue that, and to say all the workers are going to do it, the workers aren't going to do anything right now. The workers are, in the West in particular, are totally fragmented, atomized, demobilized. There is no indication of any real organization and resistance going on. They are brainwashed by identity politics. They are mesmerized by technology. They are immersed in single issue politics. Everyone running around, a big frog in a little pond, and they don't know how to come together. So I disagreed with that. I say that the real danger is U.S. imperialism, and that's where we should take our stand. Russia, of course, I believe Russia probably thought a couple things that proved wrong. They probably got some bad intelligence that if they simply sent their tanks and surrounded Kiev, that the government would collapse. Well, it didn't. I don't think they ever intended to invade and try to take the big cities, because with 150,000 troops, only 75,000 were actually combat, and you invaded on 4 fronts. You do not have the forces to take a major city. And to do so, the rule of thumb is you need four times as many offensive against 1 defensive force. There's no way they could have taken the big cities, and they probably knew it. And it's probably why Putin sacked 100 of his advisors there, intelligence people, not too long ago, and said, okay, we're going to focus on, the Russian population centers and split the country. And, put yourself in Russia's position and think of it a little bit. I'm not justifying Russia, but, put it in your position. The U.S. had pretty much captured Ukraine. It was about to turn it into NATO here. And Zelensky is even talking about nuclear missiles on his border with Russia. You're freaking them out, right? With that. That was part of the provocation, I think, to invade. And Russia probably felt, well, it's better to fight NATO on the proxy ground of, these fascists here, rather than, later when they pull off the same model and destabilize Belarus, and now we got to do it on our ground. I think that's probably, I'm surmising what the thinking is, but that's probably what went on. And if, what would the U.S. do if Mexico joined the Warsaw Pact back in the 70s or 80s even, do you think the U.S. would not have invaded Mexico? They'd have done it in New York minute. So bottom line, I don't think that there are 2 imperialisms or equal imperialism. And I think for world safety and world peace, we better find a way to slow down or stop, American imperialism, which is entering a phase of recklessness, I think, and danger.
Thank you.
Okay, next up is Janet, followed by Richard, followed by Jean. So Janet, if you would unmute yourself and ask your question, make your comment. Appreciate it.
Yeah, thank you. Can you hear me?
Yeah.
So thank you, Jack. Very informative. I want to start by saying I don't believe Russia ever intended to take the big cities. But I'm not going to go there right now. So I have three questions. One, I don't recall your bringing up fertilizer in terms of the sanctions. So would you talk about that? Russia, I believe, accounts for 25% of the world fertilizer market. Then the January 6th hearings and Biden flexing his military muscles vis-a-vis Ukraine and Russia aside, how do you think what you have just presented will affect the midterm elections? And then the third question is, well, would you put your email address in the chat? Thank you.
Well, I think I did mention fertilizer. I talked about potash, which is natural fertilizer. 75% of the world potash comes out of Russia and Belarus. That's supposedly sanctioned, but I said there were de facto exemptions going on there. But it's very important, not only for the food shortages that exist now with existing stocks of grains and so forth, but the next harvest shortages that are coming. And then, of course, that'll be exacerbated by climate change and drought going on in the US and Europe. Fertilizer is a very important part of the commodities sanctions going on, and very important for certain EME countries, not only the importing by EME of the actual wheat and corn, but the ability to grow your own elsewhere in the world. But chemical companies like it because they'll be able to charge more for their chemical fertilizers. Midterm elections, I think it's going to be a slaughter. Gerrymandering notwithstanding in the House, the fact that, there's maybe 50, 60 seats that aren't protected. Both wings of the corporate party of America, Republicans and Democrats, as I like to call them, protected themselves over the years here, got the Supreme Court to endorse it. But I think there's going to be a massive, maybe 50, 60 seats here, possible shift. It's going to make the 2010 debacle in Congress pale, I believe. American people don't give a damn about Ukraine. Most of them don't give a damn. It's not, they don't even know where it is and what it is, and this generation is not so easily ideologically swayed by, the big bad Reds over there halfway around the world. What they care about is their pocketbook as never before. And boy, are they taking a beating. I think the elites in Washington don't have a good grasp. Maybe some of them do, how desperate people are becoming with food and gas prices in particular, and rents going up, and the cost of autos and transport. In other words, these big items in their basket of consumption, are going through the roof. And you got to remember that, 3/4 of these people were, before all of this, were living paycheck to paycheck, 3/4 of them. And now some of the subsidies like childcare, have been pulled, unemployment, extra unemployment does not exist, right? There are no checks. They are going to end student loan forbearance very soon. I think they'll throw out a little bit of a sop on phasing in over 10 years of some kind of student loan forgiveness, but that won't in any way offset but students, 44 million now, are going to have to start paying again. The domestic economy is in a mess. And as I said, the only thing that they've got as an answer is recession. Let the Fed take the heat, which is one of the reasons the Fed is there. I wrote a book in 2017, Central Bankers at the End of Their Ropes, and gave the whole history of central bankers in the 20th century. And very clearly, the politicians, let the blame fall on the Fed here, protect themselves. So I think the midterms are going to be a disaster for the Democrats. I really do. I think they are. I don't know what they're thinking, except that, boy, they are really in another world here. And what was your third question?
Oh, your email address.
My email address. Just think of it, drjackrasmus@gmail. Dr, Jack Rasmus @gmail.
Thank you.
And if you want to join me on Twitter, where I comment 3 or 4 times a day on, a news of the day, I'm on Twitter at Dr. Jack Rasmus. The sign at Dr. Jack Rasmus.
Okay, next is Richard. So Richard,
Yeah,
go
thank
ahead.
you. Thank you. Yeah, a little bit of a mystery to me. The West has cut off exports to Russia pretty much, especially for things that Russia needs. And but Russia continues to deliver gas and oil and other things to the West. Essentially, from a material point of view, they're giving it away. So I wonder why they're doing it. I have some theories of my own, but I wonder what you think.
Why are Western companies' exports being cut off, or why
why Russia continues to send these goods to the West, because they're getting nothing in return.
Oh, they're getting a lot of
material.
They're getting a lot of revenue. I mean, they're getting a lot of gas and oil revenue from the West that they need in order to keep their economy running and growing.
Why? Why do why do they need those funds? It's just money. I mean, they can generate their own money. I mean, they're not getting anything material goods back from the West. That's what I don't.
Well, but the government engages in government spending, and that keeps the economy going, right? And if you did not have government spending, if you did not have the revenue, you couldn't engage in government spending, and you need revenue to import. The government needs money to provide loans and investment to its own domestic businesses, and you need money in order to import certain things you don't produce in your own country. And if you don't do that, people lose their jobs, or they end up with shortages, and then they're politically unstable.
But I think what you pointed out, that the West won't export those goods to Russia. So Russia can't import those goods anymore.
Well, the West, not, as I pointed out, not everyone in the world is on board with the sanctions. Big parts of the world like China and India that would export their goods to Russia, and other places in the world as well, Latin America. If they're going to export, then Russia has to pay them for it. Those countries don't want rubles, they want euros or they want dollars. Because rubles in their country aren't worth anything, but dollars and euros are. You see, it's what's the trading currency here, and how do you get revenue from trading currency?
Yeah, but they're getting such an enormous amount of money for those. They don't need, to buy from Brazil or India. There isn't that much they could be buying from those countries.
Oh, I wouldn't say that. I wouldn't say that.
Okay.
These are not just agricultural countries anymore. Countries like Brazil and India and China, they produce a lot of modern goods and services. Maybe Zambia doesn't, but a lot of these other countries do. They're pretty increasingly important. And besides the way, even those countries that join on to the sanctions, maybe their government does, but maybe there's businesses, that don't, they find a way that no one sees that they can engage in transactions behind the scenes. There's a lot of violations of sanctions going on. That's why sanctions in the past don't prove very effective. And the question is this massive new set of sanctions, particularly financial sanctions, is it going to be any more effective than sanctions in the past, which weren't effective? It remains to be seen. But I think
Yeah.
there's a lot of loopholes.
Yeah.
Okay, next is Jean, followed by Norma and Nina. And if I would ask people to please keep your questions and comments down to about 2 minutes because we're running out of time. So Jean, Norma, Nina.
Okay, well, thanks so much, Jack. This was a great talk, really informative, and I really appreciated most of all your concluding remarks, saying basically that there's only one imperialism in the world, and it is the United States, and it is the primary culprit behind so much of this, and it is leading us. Our friend Wells, Laura Wells, talks about the two titanic parties that are leading us into destruction. So I think that's worthwhile. But my comment is, looking at the global economy, the possibility of a real recession is really scary. And I think back about the last recession. I know David Harvey, I believe, was of the opinion that it was China that pulled the world out of the last recession by this tremendous expenditure on infrastructure, which really dazzled, I think, everybody in terms of all the money, all that it was spending on various kinds of goods and so forth, that, really kind of transformed the physical infrastructure of China and so much of the rest of the world. So, and I'm wondering if we're going into another recession, what will be the role of China? Remembering, of course, that it is a communist party, that is an alternative to global imperialism, and that it's entering into a new stage right now, I think, and people don't seem to understand that. But it's also has this partnership with between Xi Jinping and Putin. So I just wonder if your comments on this and what you think about what's going on, and in terms of the role of China in terms of the global catastrophe that we're heading towards. So thank you.
Well, I don't totally agree with Harvey about the role of China after the last 2008-10 crash. Yes, China kind of blew right through the recession because it engaged in significant government spending on infrastructure and investment and so forth. It wasn't as subjected to the financial crash at the time. It wasn't totally integrated to the global capitalist financial system. It still isn't, but it is significantly more so today than before. But yes, it was a key element, but I don't think it alone pulled the Western economy out of the doldrums. Western economy never really got out of the doldrums. Certain parts of the economy and countries did recover very slowly after 2009-10. Europe had a double dip recession in 2013-15. Japan had 3 small recessions. So the rest of the world has been stagnating ever since. Only the US recovered a little bit, but that recovery, I don't want to get into the whole explanation of it, has not been robust, you might say. And then, of course, COVID hits on top of all that and drags it all down another level. And now we got the sanctions, which are overlaid on top of all that. And we got the war against nature, or nature against us, which is, whacking the economy more than people want to admit here, and will continue to do so. China is struggling a bit with the COVID thing that hit everybody. There's no borders for disease. And that's taken a toll on China's economy to some extent. I think China can respond and come out of it quicker, and will do so. China will not fall into a recession like the rest of the West here in 2024, but its growth rate will slow. Very clearly, it will slow, but it will still be positive. I think. People overestimate the role of China, I think, in global capitalism. It is important. 25% of all the goods and services are produced in global GDP in China, but 25% are produced in the US as well, of output. Two countries represent half of the world GDP together. But the US is more integrated into the financial system, which is its financial system, I might add. And I think, if we go into a deep recession here with all the debt that's been built up at all levels, corporate, government, and household, the problem becomes not just the level of debt, but whether you can service that debt, whether you can pay the principal and interest on that debt. And if you are a company that's a zombie company, you really can't cover paying the principal and interest on that debt. You've gotten away with zero interest rates by the Fed of rolling that debt over. But when those rates rise, the banks will not roll it over anymore because you don't have the cash flow to pay for it. Now you got defaults. Now you got collapsing financial asset prices. Now you got contagion in the global financial system. And we don't know where that goes here this time around. That's the big wild card sitting there on the fence, I think. So we'll see what happens. But China basically is not going to save the West. It didn't in 2015, and it's not going to do it this time either.
Well, thank you. Thank you. And again, I'm one of those that has a very positive view of Xi Jinping and the Communist Party of China. So I'm probably off in one level. But again, thank you. And I'm sure we're going to return to this topic again and again. Thank you.
Okay, next is Norma, and then Nina, and then Keith. And if you would keep your questions to about 2 minutes, because we have to wrap this up pretty soon. So Norma, please.
Okay. Hi, thank you. Thank you for the presentation, all the work. We read you now and then and again, Jack. I'm mounting my pulpit again. Oh, first I want to mention I posted this in the chat. The Metropolitan Opera has banned Anna Netrebko. If anybody else lets me know the sorrow they feel at the idiocy. And it's an interesting discussion that the Met has gone through in order to do that. So the speech from the pulpit is that this is about that that Russia, the ex-Soviet Union, has been being besieged for 110 years. And this is just another project against the communist, the Bolshevik revolution that is being put on by the imperialist states, the US hegemony. Russia has been doing this. You comment that it went slowly in its progression of its economy and so forth. Russia was ex-USSR was attempting to follow an ideal, which is an unknown. Well, no, United States had all this myth about what a great democracy and for everybody and all that, but it never meant it. But the Soviet Union meant it for a benefit for all the people. The Soviet Union annexed, in a sense, or committed the imperialist act. Keith has got his mute open.
Go ahead.
Yeah, the Soviet Union collected the border countries because it knew that the border countries were a danger to continuing the revolution. Is all. It was not an imperialist action. It was again a preventive action. And the United States was party to overthrowing actually the Russian Revolution in '91, which obviously had been failing owing to the united US hegemony fight against it. Our owners can ill afford the success of the Bolshevik Revolution.
That's
Thank
about
you.
2.5 minutes.
Thank you.
Okay, go ahead. Next would be Nina. If you
Okay.
unmute yourself. Yeah.
Yeah, to the speaker, number one, you mentioned Venezuela, and in terms of oil production, what do you think? Is there any new role for Venezuela? And number two, I guess this is the question of the of the moment or of the time. What would have been the better way of dealing with the fact that Russia, it appeared, was trying to acquire land as it has in the past and invaded Ukraine? And what would you suggest from your political point of view of what would have been the better way of dealing with it? Ha ha. Good luck. Thank you very much.
Okay, as far as Venezuela is concerned, it is given a new role. The U.S. Gave permission, as if it had the right, gave permission to Europe and Venezuela to now buy Venezuela oil. So oil will be shipped now from Venezuela, and it will earn oil revenue. It's one of the exemptions from the sanctions. Okay, well, it's not really a sanction, except Venezuela had its own set of sanctions. Okay, but yes, Venezuela now can ship oil to Western Europe. It's one of the ways that Biden is desperately trying to backfill the loss of Russian oil to Western Europe. U.S. oil companies don't want to add more. Bin Salman and Saudis, well, they may now add more, but not much. Iran, that whole thing fell through, as I said. So Venezuela, yeah, okay, you can ship now. The U.S. will never buy Venezuela oil because of political opposition, in the U.S. from that group. But now Venezuela will be able to ship some oil, okay, for the first time. A better way of dealing with it, look, something happened, as I said, in the late 1990s. That's when neocons got their claws into the foreign policy establishment in the U.S. And that's when NATO started marching east, 1999. That's when NATO started bombing Yugoslavia, what was left of it, Serbia, right? Soon after that, NATO gets involved in Libya, right? NATO gets involved in Iraq and so forth. The old guard American advisors, George Kennan and others, had warned, and several American ambassadors late 90 warned about, we gave assurances to Russia we weren't going to move east, that buffer was going to be there. They'd be independent states, they could trade with everybody, both sides, but we will not move east. And of course, they moved east, and the adventure in Georgia, the invasion of South Ossetia and so forth, and then the disruptions in Belarus and Kazakhstan. It's very clear the U.S. and the neocons are putting pressure on Russia, encircling it, probably want to push it to a point where it declares neutrality and demobilizes in terms of nuclear capability. That won't happen, but I'm sure that's their pipe dream. Very clearly, the Rand Corporation in 2016 said you're going to have to neutralize Russia before you go after China, right? And that's exactly what's going on here. So that's imperialism, Anyway, that's my analysis. They could have solved this problem by simply saying, as Russia was demanding in 2021, and U.S. refused to even talk to them, that look, let's sign a treaty, three-way treaty. Let's agree that Ukraine will never join NATO, right? And you won't put any missiles here, and it will be independent and can trade with both sides. And that was the opportunity for a compromise. But as I said, Biden and the US did not want to compromise. Quite the opposite. They wanted to provoke Russia, push it, because they saw those 10 big gains I talked about in that article, geopolitical and economic gains.
Okay, Keith, if you would ask your question, please keep it to 2
Yeah.
minutes. So,
I'll be very brief. Thank you for
Okay.
the presentation. I just wanted to ask, what is the chance that now that the sanctions are really hurting the European economy, what is the chance that they will refuse next time America has some big project for them, that they will refuse to go along?
Yeah,
Right,
well,
isn't it, right?
you got to separate what Europeans are you talking about?
Yeah,
I'm
right.
talking the Western Europeans.
Western, okay, yeah, because the Eastern Europeans are lockstep with the US, so they just
Except for Hungary, which is doing
Yeah,
its own
right.
thing.
Exactly. Well, you got to understand they like the position they are in, the elites, the capitalist elites in Europe, like the position they are in the global US economic empire structure. They do quite well. They make a lot of money, and they are able to get the US to defend them, pay most of the bill for, war and defense, so that they can throw more crumbs at their workers and their populace and keep them happy, keep it stable, and they engage in financialization within Europe and globally, especially the Germans, and they make a lot of money. It was a nice arrangement for Europe. Of course, it makes them sort of the tail on the American dog, right? And UK is the flea on the tail of the American dog. That's do they really want to change? I don't know. I think they would like a stable arrangement like they used to have, and it's looking more unstable. The US is looking more unreliable. You get Trump, and now you got this Biden adventure, and they must be having second thoughts.
okay, I think I'm going to ask the last question and give you an opportunity to wrap up if you'd like. I thought you did a really terrific job of describing the scope of the sanctions and some of the different forces that are operating. And one of the takeaways I got from your presentation was that, at least in the short run, there's been a price rises in oil and restriction, not restrictions, but the unwillingness or the inability of Western Europe to cut back on its imports of Russian oil at this point are really offsetting whatever effects there are right now of the sanctions. So what I'm asking you is, in the medium and longer run, do you think that these forces will bring to bear greater pressure on the Russian economy? Are they going to find it difficult to find inputs for their production system, their manufacturing system? And will there be sources of demand if the Europeans are able to reduce their actual imports of Russian oil if they do, will there be other places where they'll be able to sell their oil? For example, will India, China, or parts of Latin America and Africa step up? So it's kind of more of the long run impact. What is your thinking about that at this point? I know it's crystal ball gazing a bit, but from you did a good job of getting into the details. Appreciate what you might have to say about it.
Well, I think a lot depends on how soon the hot war in Ukraine ends and on what terms. Okay. I think what you're going to see, the US does not want to ever reduce its sanctions. It wants those to continue. That's where it makes a lot of money. And the capitalists, I believe, are at a point where Ukraine, and they're saying, hey, let's take the money that we got and run. Both political capital as well as, money capital here. It's not worth the risk, And doesn't look like Zelensky and the Ukrainians can deal with this long term anyway. They're getting their butt kicked. They really are. And I think if it ends fairly soon, you're going to see not as much pressure to continue in Europe, to continue the 100% sanctions, and there will be workarounds that will emerge and begin to appear. I don't think Europe will ever get, if it settles here in Ukraine, does not get worse and go on. I don't think Europe will totally extract itself from Russian energy, but it won't be as dependent upon that energy. It will be much smaller. In the meantime, they will find other outlets with the help of the US, which is going on now, as they are in Venezuela. They may get more from the Middle East, from Bin Salman and so forth, right? They will get a better mix so they aren't so dependent on Russia. But I don't think they'll ever really totally extract themselves from some of the Russian energy, especially if the thing ends fairly soon, which I think it will. I think there's a good chance that the Ukrainian military will collapse here before the end of the year. And I think the US knows that. I was surprised to hear Zelensky say he's losing 500 to 1,000 men at arms a day. I mean, think about it. Why would he say something like that? That's an act of desperation, I think. And I don't think they can stop longer term. And what's going to happen, it looks like, they're fighting in this kind of a evenly, they're not making big gains, the Russians every day. But there comes a point where, the Ukrainian military is so debilitated, it kind of collapses. And I think that's going to come here. And that's why the US and the EU and NATO see that coming. And before it gets worse, they want to wrap it up some way that they can. And if they do figure out a way of wrapping it up, and I think Putin, will go along with that. I think Putin would like a divided Ukraine, and I think he may get it. And if that's so, then all this pressure for sanctions in Europe will weaken, I think, and then we will see. A lot of capitalist backdoor deals, as always before.
And we'll move on to round two.
Okay, so shall I stop?
China.
Let me just thank Jack for coming and speaking to us. Really appreciate it. Really informative presentation. You're always welcome to come back. And this was really very valuable, and how much we really appreciate it. So thank you, Jack, for joining us today.
My pleasure.
Institute for the Critical Study of Society at the Niebuhr Proctor Marxist Library receives no corporate funding, nor do we have any paid staff. We rely on the support of working class folks that share our commitment to the socialist legacy of Karl Marx. We continue to need funds to meet necessary expenses. Since we can no longer pass the hat at our in-person forums, please send contributions to our treasurer, either online via PayPal or by check. The PayPal ID is ICSS Sunday, SUNDAY, at yahoo.com, and the name is Richard Fallenbaum. And checks may be made out to Richard Fallenbaum and sent to him at 1225 Nielsen Street, Berkeley, California, 94706. Fallenbaum is spelled Fallenbaum. To donate directly to the Marxist Library, send a check to the Niebuhr Proctor Marxist Library at 6501 Telegraph Avenue, Oakland, California, 94609. or directly or donate online at www.paypal.me/npml. For information, write to npml at marxistlibr.org, and the website is marxistlibr.org.